Well, it was a week marked by resurgence in market uncertainty, and on a weekly performance, we're starting to see a clear sign of decoupling. Hello and welcome. I'm Tshepo Mongwai. This is Bottom Line with your market reviews and what to expect this week. I've mentioned decoupling because US markets posted a strong weekly gain, while other markets, including the JSE, Europe and Asia, showed some weakness towards the end of the week. Here's some contrasting performance that we have observed. For the entire week, the JSE added a 0.6%. However, it was down on Friday. The index still managed to reach an all-time high of 113,196 points on Thursday. The US market were down on the start of the week following concerns of the health of the credit market triggered by the two regional banks that disclosed write-offs and legal proceedings related to bad loans, as well as new escalation in the US-China trade war. However, later in the week, we saw US stocks rise, but there's still a lot of volatility if you look at the US tech-heavy NASDAQ, how it has been performing in the week that was. And of course, on the 10th of October, the index tumbled 3.6% in its largest single day percentage drop since April 2025 on renewed US-China trade tensions. It has moved from a record high of 23,000 and plummeted to 22,200 points. And of course, for this week, the US markets will be heavily influenced by the third quarter earnings that we are expecting in the week. So the earnings and the guidance from major US companies can set the mood of global equities, including the JSE. Locally, as a heavy commodity economy, local investors will keep a close eye on those third quarter GDP numbers out in China. In fact, the figures came out a few hours ago showing that GDP in China slowed to 4.8%. And this disappointing Chinese data will likely not support the rand, as it suggests that the weaker export demand is taking place in China. Locally, we have the consumer price inflation for September out on Wednesday. For now, we turn our attention on financial literacy. In our Traders Corner, we are joined virtually by Lindwell Clark. He's head of consumer education at the Financial Sector Conduct Authority. Lindwell, thank you very much for your time. Some have argued that as a country, we need more regulation to protect consumers because financial education remains very low, even among well-educated consumers. What's your take?
Good morning, Tshepo, and good morning to all the viewers. Yes, indeed, people have argued we've got too much regulation. I think from the FSCA's point of view, because we are a consumer protector, which looks at both the industry as well as consumers, we feel that we can integrate this. Because if you have a more educated consumer, you probably have a better client from the industry point of view. But also from a protection point of view, where consumers, if they have the financial knowledge and the financial literacies are quite high, they then become quite protected in their own rights because they then know what kind of questions to ask a financial advisor. They know what kind of needs they have personally, and they know how to translate those needs into the types of products they would like to buy. But it starts at a very small process, Tshepo, and it's called budgeting, or let's call it planning your money. And if you know how to plan your money, I think in the end you will know how much money you have left. But the big challenge, of course, is sticking to that budget. As you would know, because some people feel that they want to keep up with either the Joneses or the Chabalalas, if I can put it that way. And sometimes you try to step out of your comfort zone and try to acquire something which you cannot afford.
Then what we've seen about that is that some businesses actually leverage on that consumers' poor financial literacy to maximize their profit. I mean, people, when they buy cars, they get products that they don't even need, added features that they don't even understand.
And this is where your education comes in, because before you go buy a car, you should actually do your due diligence as the consumer and customer to find out what am I paying for. So as you said, sometimes you get added products that you don't actually need, or you don't even know what you're paying for. And this is especially very prevalent in the furniture buying business, where people buy tables, couches, TVs, and then they've got the credit life that they don't know that they have. that they've signed up for. So your premium starts off by being, say, 100 Rand a month. And eventually, when you get your bill, you find, but now it's 150 Rand a month, and you don't know where that extra 50 Rand came from. And this is, again, where the consumer should question. If you don't question and you don't ask the right questions, then you'll always get to on the short end of the stick. And this is where we also trying to promote ethical business. If you're a businessman from your side, you need to be ethical, and you need to provide the consumer and disclose all kinds of cost items that are on the premiums or on the monthly payments that you have. And I think if you promote and you become an ethical business, you will actually have more profits. And obviously you will have better profits because your clientele base will increase.
Just in a few seconds, we always talk about unscrupulous brokers here on this segment, particularly people who invest online and they partake in such schemes. What is it that the FSCA that is doing in that space to ensure that there is more regulation and, it's got teeth?
So we're trying not to over-regulate, but we're trying to inform the public, especially if you go onto these digital platforms and you're starting to invest, that you need to make sure that the platform that you are on, that is actually a platform that is either underwritten or it is supported by a financial services provider that is authorized and regulated and licensed by the FSCA to sell that particular product. We've seen the emergence of artificial intelligence. We've seen the emergence of digital platforms. And we've seen how people can get conned. And I think it is very important that you make sure, sometimes, and one of the latest scams that's out there is relationship investment scams. And I think people just need to be very careful on the platform that you go, because normally people kind of gain your trust. And once they have it, all of a sudden there's this investment opportunity, and you fall for it and you end up losing your money. So the message out there is be careful, do your due diligence before you invest on any platform.
All right, thank you very much. That's Lenville Clark, Head of Consumer Education at the Financial Sector Conduct Authority, joining us virtually in our Traders Corner. Remember to join us again next week here on Morning Live. This is Bottom Line, and Morning Live continues with Sakina and Leah.